Hey everyone, welcome in to another daily editorial here on the KE Report. In this daily editorial, we are getting an update from Tristar Gold, traded on the TSX Venture Exchange under the symbol TSG and on the OTCQX under the symbol TSGZF. We are chatting with the president and CEO, Nick Appleyard. Now, Nick, I wanted to get you back on the show because it's been a couple months since we last chatted, and we did last chat and even record a webinar on the back of a big stepping stone for the company this year when you released a PFS, a pre-feasibility study on the Castelo de Sonhos project in Brazil. That was a big stepping stone for the company, and now a lot of people are wondering, well, what's coming in 2022? Let's start off with a quick recap to bring everybody up to speed on that PFS, released October 2021. Some of the data here shows that average annual gold production around 146,000 ounces, after-tax IRR of 28%, after-tax NPV of $321 million US. This is all at a $1,550 gold price. Just bring everybody up to speed real quick on some of the other results from that PFS, please, Nick.
Yeah, thanks, Cory. Thanks for having me on again. Yeah, no, that was a major milestone for us getting that out. Obviously we've now got, for the first time on this asset, 1.4 million ounces of probable reserves, which is a very nice metric for the company to have achieved. And as you say, at least in phase one there, we're producing round numbers 150,000 ounces a year, which is it's just really significant and is the target rate we were after. The all-in sustaining at $900 an ounce again is really, really good. I think one thing that's come up to me a couple of times since we've published these numbers and people are looking at them, our capex 260 million is a reasonable number for a project this size. But I think it is important to note that these numbers that we've published are very recent costs, so they do capture the escalation that we've been seeing in the industry recently. So I think sometimes people will compare us to someone who published something 2-3 years ago, and that was a different world back then. In our PEA we had a capex of 180 million, and in today's world it's 260. Still makes a huge amount of money, but the costs are very recent and valid in the world we find ourselves right now.
Nick, what about sensitivity to the gold price? As I mentioned, that PFS was done at $1,550 gold, so a couple $100 below where gold is trading right now, but I know everybody is also taking a bit more note in terms of how much money these projects can make at lower gold prices in case gold does drift lower.
Yeah, no, it's always a good look. I mean, I consider myself a conservative investor as well, so when I look at projects, I always look at, well, can this keep producing if gold has a few bad years and drops, or does it have to sort of become what they call a swing producer and shut down when in low prices? Our sensitivity analysis showed that even down at $1,200 gold, this would still be making money. So not a huge amount. You'd be looking at a pre-tax rate of return of about 12% at that time, but I think that's a long runway down, that we would never anticipate gold falling anywhere near that far, but it would still be profitable at those levels. Obviously, higher gold, the profits just get better and better and better. And, I think even around today's price, you would be looking at, MPV of somewhere in the, $500 to $600 million range.
Well, Nick, another thing we had talked about is, moving forward as you continue to work on the economics of the project and work towards a bankable feasibility study, you think there's some room to increase the throughput potentially, and that would have a beneficial effect on cost. So just walk us through what the costs are currently and how an increase in the throughput would help things.
Yeah, it's a good point. We are quite a conservative group, so when we publish something, we want to be as sure as we can that it's going to be correct. So with the metallurgical test work we did, we worked out that, we can get that 98% recovery at 105 micron grind, which is quite it's an average grind size for a gold deposit. What our actual test work was indicating to us was that there's a pretty good chance we can get that similar recovery at a coarser grind. And what that means to us from a project sense is effectively the same process facility will get the same metallurgical recovery rate, but you can maybe get 20% more material through it. There's a few little other swings and roundabouts you've got to look at, but that's the big picture. So right now we are doing some additional test work. We had sample left over, so it's fairly cheap and quick to do. And we would hope to have that ready by Q1, Q2 next year, and to look at just on the same capex, the same material, the same plant, the same facility. You get more material through, and obviously your fixed costs become a lower percentage of all your costs, and you bring your revenues forward a lot, which really helps the rate of return and the NPV of the project.
So Nick, let's talk about next year then. That's what a lot of people want to know is what are the plans for next year? What's on tap? Break it down for us, please.
Okay, the critical stuff going on. I mean, I think internally for us, obviously that optimization project little study I just talked about it's important, and it'd be really nice to put out even better economics than we've got now. Internally for us, the most critical thing is the permitting. You've got to move that forward. We expect to be filing our EIA in April next year, and that will be the start of the application's in. Now we need to keep pushing and get that preliminary license and then the installation license on this project to have a fully permitted project. We've got really good news from that so far. We have got no red flags come up. We're getting good feedback and interaction with the state government on all fronts. So, we've done a broad swath of work already, and there's no red flags come up already. So we're really, really happy with it. And we'll probably be trying to summarize that to the market in the near future so that people can see the amount of work going on there.
Well, Nick, another thing that I think would be worth bringing up, there's this period of time where a company's at the stage you're at where they kind of call it the orphan phase on the Lassonde curve, where you're working on permitting, you're doing the met work, you're advancing the economic studies. But we were talking off mic that oftentimes there's kind of a change in the guards in some of the investors. And there's a lot of people that only follow companies for their drill news. And then when you get to this stage, they lose interest and go chase another shiny object. But there's also a lot of institutions and funds and larger investment houses that come in at this point that you're at because they're looking forward to that golden runway where the company gets re-rated higher on the Lassonde curve as they move into this pipeline of development. So how do you want investors to think about the company as you move into 2022?
Yeah, no, that's a great point. And I think you're right. We're getting, there is a changeover from exploration phase investors who are looking for drill hole results to development investors who are going, okay, this company is going to go from 0.15 NAV to half or 1 times NAV. There's a nice build up here as the project's de-risked and move forward. For me, I see that we're in a dip now. The market is soft, and we're in that phase where we're getting a bit of a changeover. I know that it's public record that both people in my office here, including myself, have been buying. We believe this is the last dip before you get that ramp up now towards production and re-rating, revaluation as a near-term producer. So yeah, I think we're seeing that a lot. I think we're seeing that with the type of calls we get, the type of funds who are talking to us now. People are looking at this as the next major development asset in Brazil, and in some ways probably the last multi-million ounce development asset in Brazil in the hands of a junior. M&A activity in the industry has definitely been picking up now, which is something we've been waiting for years. And G Mining bought Tocantinzinho a few months ago. Hochschild's Mining have just announced they're going to buy Amarillo Gold. There's no one but us left after that with a multi-million ounce asset, advancing permitting. That makes for a very exciting phase for us, I believe.
Can you elaborate a little bit on that? Because we have seen M&A happen. Some of the headline deals have been maybe a little outside of Brazil, but you are right. There has been some M&A in Brazil and some larger companies expanding, I guess, their footprint in Brazil. What comparisons can you make between your project, any of these other projects that have been taken over, or just, again, more general comments on that increase in interest in Brazil for larger companies?
Yeah, I mean, evaluation is always hard. 2 projects are never identical, but we obviously do look at it. But I think it's going to be that rarity now. Brazil has been improving as a mining jurisdiction. It is a major mining jurisdiction. It's a major mining country. I think it's no secret that some of the other major mining jurisdictions in South America or Latin America have been having some troubles, and becoming less attractive. So it's sort of not just leaves us standalone in Brazil, but Brazil is sort of standing out in South America now. As I don't know where else you'd go, Colombia maybe, but Peru's got its challenges, Chile's got its challenges. Brazil is looking really good, and then within Brazil, we're looking good. It's a little bit like the company. We're in Pará State, which is great, but then even within Pará State, we're in the best location. So, yeah, all the stars are aligning there. It's looking quite exciting, and personally, I think we've been waiting a few years now for this M&A activity to start, and to see two. I think there may be even 3 deals this year in Brazil is exciting, and within the industry in general. Even though the valuations of the juniors hasn't been stellar, the producers have been making money like crazy at $1,800 gold, and it looks like they're starting to go shopping.
All right, Nick, we're going to wrap it up here. If anybody has any follow-up questions regarding any of the work coming up for TriStar Gold or anything still within that PFS, please email us, fleck@kereport.com or shad@kereport.com. We will get those addressed, and Nick, we'll have you back on as some more news is released out of the company. Thanks for your time today, Nick.
Thank you very much, Cory.